Before I get into the video, to those of you who have found some of my other videos from my 650 plus invisible video for the TSC video competition, first of all, thank you for watching. I acquired more views than I thought I would for that submission. But for this video, this is a video for the RBSL, which stands for the Raptors Basketball Simulation League, a simulation basketball league where we have 30 different general managers spanning the globe, from Canada to America to Germany to Slovenia and even to the Philippines. Not related at all. In this video, I go over some things in the RBSL universe in a stock market context. So obviously not financial advice. I mean, you can't even really take it as financial advice because the stocks and tickers don't exist in real life. But if for some reason you're still interested, please feel free to listen, and thank you very much. Alright, now to the rest of you guys in the league who are actually here for the video. Before I get started, there are a couple assumptions for this type of content. Number one, there are no derivatives in this market. So there are only simple long and short positions, so no options trading at all. So let's assume no calls, puts, or any of that stuff. There will be no issuing of additional shares or any sort of dilution in this market. There will also therefore be no stock splits at all. And most importantly, market size of the team does not have an impact on share price or the market activity at all. Okay? And lastly, more of a ideological thing, but if you notice that some of the share prices correlate to some of my GM rankings, that is entirely coincidental, kind of, because the share prices that I determined were, first of all, arbitrary. I kind of made them up in the context, however, of franchise history, not GM history. Although GM history does play a factor in some of the commentary, it's not the primary cause of stock price that I outlay in my research report and this video. The PDF for the full report will be in the description as well as in our WhatsApp chat and our forums, so you can have that open as we go. But the premise of this video will be, it's around a fictional, obviously, our game is fictional, a fictional market research and investment firm called RBSL Boomers Market Research Incorporated. And they're doing their triannual market update. And I hope you guys enjoy. And let's talk about it in the WhatsApp chat, alright? Thanks. Good morning and welcome to the triannual market update and conference call for RBSL Boomers Market Research Incorporated. My name is Wilfredo Nichols. I have a JD and MFA, and I am a former player in the RBSL Basketball League, and I am currently acting head analyst at the firm, and I will be your representative today for the conference call. I am also the author and writer of this year's market research report, which you should have all received through your emails or through the portal for investors. There will be no one else joining me today due to the coronavirus 2115 pandemic. However, if you have any specific concerns or require further consultations, please page us via the investor hotline hologram tool that we have released as of last year. For the record, today is July 17th, 2116, one day after the free agency day number 1 in the RBSL. Before we begin with the securities discussions, some announcements regarding our firm. Firstly, we would like to announce the arrival of Heriberto Sarmiento, also another former player from the Atlanta Hawks, former All-League, All-Defense, All-Star center and power forward, who has long been curious and keen regarding the market and actually completed his MFA alongside me after our retirements. We welcome him to the firm as a junior analyst. The second piece of news is we announced the departure of chairman of the firm, David Jackson, Rest assured to all new, current, and prospective investors, our vision in regards to market research, balancing, and reports will not change. Our philosophy has not changed with the departure of David Jackson, who has announced his retirement. And rest assured to all investors that we will continue to do our proper investigative due diligence and try to provide the best investing advice for our clients and customers. A note for today's conference call: due to the vast number of securities in the market, we will only be able to cover 10 different securities today. We will be presenting 5 stocks that we are bullish on and 5 stocks that we are bearish on, and then we will have a discussion on our ETF offerings and rebalancing updates. If you have any further questions, please refer to the full report, like I mentioned before, or set up an appointment. Thank you. Now then, let's get started. Any questions should be forwarded to the moderator at the end of the call. Thank you very much. Firstly, we have the Milwaukee Bucks with the ticker symbol BUCK Buck. Its current stock price as of this morning is 27.65 TBD per share, with a target price that we have determined to be 57.99. Its 104-week price range ranged from 9.32 to 33 TBD. And for note, our target price, if you have forgotten, is for 36 months, so in 3 seasons' time. Please do remember, this is a target price that we have calculated as an analyst team and is by no means a guarantee in the securities market. Our evaluation of the Milwaukee Bucks is very bullish. We believe that the CEO, Jack Connell, and his supporting executive team has put together a generous and generational talent in Michael Campbell, with a mysterious but formidable supporting cast. As you may remember, the announcement of the Michael Campbell acquisition resulted in the stock price of the Milwaukee Bucks soaring, absolutely soaring. But upon the commencement and finishing of the first season with Michael Campbell on the roster and the team, the stock tanked almost 70% due to disappointments from investors who had obviously expected at least a playoffs appearance, and rightfully so. We expected the same, and we were also disappointed. And as such, there has been a severe lack of investor confidence moving forward, particularly due to the history of the Milwaukee Bucks CEO and their past performances and quarterly reports in pretty much the past decade. To those who are curious about this case, we recommend investors to read the reports we have on Zion Williamson and the Bucks and George McCarty and the Bucks prior to investing. However, with all of that in mind, we still are very bullish on the stock. We believe that the Milwaukee Bucks has never had a player so transcendental as Michael Campbell before, a clear purple player who is capable of leading a team and the company as a whole almost. Furthermore, the acquisitions in Mozzarella and Priapus Mantooth, as well as backup big and rookie sensation James Wiseman, as well as the other contributors on the team, has fueled some investor frenzy almost, including from us. Although we recognize that the shoddy, to be frank, history of the Milwaukee Bucks can make it a bit of a risky play for this stock, we have characterized Buck stock as a really very high potential, albeit very risky, growth stock that we believe will have an astronomical rise in stock price given an adequate performance in this coming season. We project by our risk assessment and our algorithmic calculations at least a 55-win season for the Milwaukee Bucks, and as a result we are very bullish on the stock, and our target price of 57.99 TBD in 3 years is actually very modest, and personally I have a much higher anticipation and expectation for the stock. Therefore, And furthermore, actually, we have investigated rumors and speculations that the Bucks front office has brought in consultants from other strong teams in the market, strong companies in the market, including some hints and consultation from teams such as the Atlanta Hawks and the Los Angeles Lakers. And as such, we are confident in the team, the executive team, and the CEO to pull it off. So as such, we have rated the Milwaukee Bucks and their stock BUCK Buck as a strong buy for investors. The next stock that we are bullish on is the Utah Jazz and their stock ticker Jazz, J-A-Z-Z. Its current price as of today, this morning, is 388.10 TBD, and we have determined a target price of 670.25 TBD. The Jazz stock has seen a 104-week price range of 170.34 to 399 on the dot. Now, the reason why we are so bullish on the stock as a firm at RBSL Boomers Market Research Incorporated is the return of Christoph Pomeranian as the CEO. Although the rumors behind the CEO replacement do not seem hostile, we do understand that Christoph Pomeranian is a very aggressive individual, both in terms of demeanor and his performance as a leader of a company. The historically legendary company saw its stock price more than double at the announcement. New and old investors alike started dogging on the stock due to Pomeranian's incredible history with the company about 20 to 30 years prior and dating back even further. Christopher Pomeranian is characterized as a CEO who is exceptional at talent evaluation, at asset consolidation, and the ability to capitalize on holes in the market to excel in the league. Now, not is all fine and dandy. As we have determined through our machine algorithms and our risk assessments and various calculations, that the Utah Jazz's asset bank is rather sparse in comparison to other teams in the league, and particularly rebuilding teams. So although they have limited assets to work with, which investors who have done their own due diligence have identified, even so, we at RBSL Boomers Market Research Incorporated are very bullish on the stock, having seen as boomers the performance of Christopher Pomeranian. And already we've seen Pomeranian make a couple different business moves and business decisions, including moving out of the most recent 21-16 draft. And although newer investors may be a bit wary on the certain moves being made and perhaps wary about how talent and such will be able to be evaluated by such a old-timer GM, we recommend that investors consider buying as we project the Utah Jazz to once again return as a premier growth stock in the market. And therefore, we have characterized and rated Jazz stock as a strong buy once again, for the first time in many decades. The next stock that we are bullish on is the Golden State Warriors with their stock ticker GSWW. Its current stock price sits at a mere 19.34 TBD per share, and we have calculated a target price of 29.33. It has seen a 104-week price range of 14.67 to 19.99 TBD per share. We are cautiously optimistic as a firm at RBSL Boomers Market Research Incorporated, and we believe that the CEO and the executive team has learned a lot of lessons the past couple of years since their taking over of the company. There is definitely a struggling history when it comes to the Golden State Warriors. The last decade in particular has been a massive struggle for the executives at the headquarters, with countless miscalculations, risk assessments, and blundered acquisitions from CEO Jakerson Trez. From the conference finals giant of the late 70s and early 80s to the current dismal situation in the Bay Area, the stock price has had a steady decline of more than 90% over the past couple of decades, but we believe that they are in a prime position to recover and rebound. We actually do believe that the Golden State Warriors are well set up for a potentially promising future. Please note that we have determined its potential, not a given. We believe that the CEO is becoming more apt at dealing with working on fewer short-sighted moves, and with better risk analysts under their wing, that they will be able to acquire better, more accurately determined strategies, talent, and staff for their success, particularly with the new acquisitions of Charlie Singleton, Truman Campbell, and RJ Hampton, which we believe were great business decisions and a strong sign for a learning and developing executive team at the headquarters. Now, it has to be said, mistakes can still be made. Like we said, it's potential. This is a very risky stock. We have seen the Golden State Warriors to be proactive and reactive at the same time. But regardless of what team you are, regardless of who you are, risk assessments must be carefully done. Business discussions and calculations and negotiations must be done in good faith and be done well. And although Jakerson Trez has failed at that in the past in certain cases, we believe that given the right consultation and the right mindset and the new vision that they've laid out recently, we believe that more investors will buy in over time as more evidence of solid business decisions arise, and we as a firm are bullish on the stock, and we recommend investors to add to their position and add to their portfolio after doing their own due diligence. The fourth stock that we are bullish on is the Detroit Pistons with their ticker symbol DETP. Their current price sits at 147.30 TBD with a target price of 200 on the dot. Its 104-week price range goes from 120.01 to 163.67 TBD. We are bullish on the stock because we believe that it is time for the Detroit Pistons to capitalize on their assets, their young talent, and bring back and hound down on the hints of dominance that they've showed in the recent years. Investors may remember that the Pistons had numerous championships in about a decade ago, resulting in a share price peaking at 401.55 TBD per share. Now, since then, the stock has seen a very steady but drastic decline, but we believe that they are in a prime position to recover strong. We have identified two key power figures in the organization that are entering their primes, number one being Darren Jeller and the second one being Merle Chan. Particularly with both of them being on relatively affordable contracts, especially Merle's final rookie year. We believe that the CEO, Yanez, must make quick consolidations and acquisitions in order to propel their company back into the limelight and capitalize and regain investor confidence. Although senior investors and institutions are concerned at the CEO's lack of history in terms of being able to put together more than one successful build or philosophy, we at Boomer Market Research Incorporated, we are still bullish on the stock. We believe that the CEO and executive team have learned from the past couple of blunders in the last 6 years, and we believe that they will be able to pull out a 50 to 55 win season within the next 3 years, which will propel the stock back into the 200s. So we recommend investors to buy and add to their position. The final stock that we are bullish on that I will present today is the Chicago Bulls with their ticker symbol BULL, Bull. Their share price right now sits at a whopping 787 on the dot. We have set a target price of 958.88, and the stock has seen a 104-week price range of 559.13 to 827.46. So it is definitely one of the most volatile stocks in the market right now. We've determined that the Chicago Bulls are a juggernaut in the making, and we'll see a return to glory within the next 5 years. The stock is volatile for sure, but investors are confident. The botched deal for Frederick Miller saw an almost 20% drop in share price over the next few days after that announcement. But actually, a lot of senior investors, institutions, and boomers actually bought the dip due to historical success of the GM, Maxaroni, and assurances from the executive team on future-looking yet still win-now moves to bring the company back into glory. Returning to the conference finals in the 21-15 to 21-16 playoffs was just the start of that, and actually sparked a buying spree, as you may have noticed. And that was even fueled further with rumors of a new Frederick Miller deal. Furthermore, and the final bullish case catalyst is you got Rona. The COVID 21-15 pandemic is starting to subside, and if you don't know, the COVID pandemic was started by You Got Rona, the player on the Bulls. He has since been reprimanded supremely, and with the vaccine starting to roll out and widespread vaccination campaigns being embraced by citizens, the pandemic is in its latter half and will hopefully be dealt with by the end of the fiscal year, and is another catalyst for bullish investors such as us. We recommend investors hop on as soon as possible to this growth stock that we believe will skyrocket to heights that were seen back in its glory days. Now for the 5 stocks that we are bearish on. The first one is Indiana Pacers with their ticker symbol PCER. Now, this may come off as a bit controversial or confusing to investors in the call today, but our opinion and market analysis at RBSL Boomers Market Research Incorporated is that with the championship acquired, we are already starting to see, we are predicting a settling down of sorts from the organization, the company, and its employees. Its current share price sits at 333.45 TBD, and we have calculated a average target price, of 287.89 TBD. And we've seen a 104-week price range for PCER from 199.55 on the low end to 379.67 at the winning of the championship. Before we continue, the 2 things. First of all, we would like to relay our sincerest congratulations to the Indiana Pacers executives team and the CEO for their success this past season. Secondly, RBSL Boomers Market Research does not hold any short positions, and we have never held short positions. So please take that as you will. Now, we have identified the Indiana Pacers as a short-term powerhouse. With the announcement of the Superstar Center acquisition, Basil Moore, who we do contend and agree that will form a formidable deal with Charles Dean, and that actually did trigger a monstrous buying frenzy that shot up the stock 15%. But due to the ages of those players, and due to a history of questionable roster rounding out and secondary acquisitions, we are bearish on the stock, and we see a grimmer future than compared to other investment firms and market analysts. It is not so much that we don't believe in the CEO and the executive team, but to be honest, more so that we believe that investors should start taking profits, as the company and the team will only be declining from here before potentially rebounding a decade down the line. So therefore, we have rated Indiana Pacers PCER stock as a reduce for investors. The second stock that we are bearish on, and it's a very similar case to the Pacers and PCER, is the Memphis Grizzlies and GRIZ, Grizz. Its current share price sits at a astonishing 1,254.64 TBD. We have determined a target price of 999.40. GRIZ has seen a 104-week price range of 1045 on the dot to 1489.67, which was very overinflated in our honest opinion as RBSL Boomers Market Research Incorporated. Now, our catchphrase for the Memphis Grizzlies and their stock is a legacy established but at investors' cost. The stock, in our opinion, has become incredibly overvalued, and particularly with the fact that someone in the organization, in the executive team, has let the cat out of the bag in regards to their intention to ride out Winston Stitches and Evan Hatzis into the sunset. Although the Grizzlies have long been a loyalty and family-run, almost family-like company, we believe that that is unfortunate for investors, as this blind loyalty can result in subpar performances moving forward. This was already demonstrated in the most recent playoff run for the Grizzlies, in which they were knocked out of the second round, and therefore we believe we have rated the Grizz stock, GRIZ, as a strong sell. We strongly recommend our customers and our investors to unload their positions and take profits. If you investors who listened to our bull case on the Grizzlies 6 years ago have already made substantial gains, and we believe that although we have confidence in the CEO Aladdin Koi's abilities to right the ship and lead a recovery within the next 5 to 10 years, we stress that Grizz stock has been a premier and overinflated stock, which will continue to decline closer to our target price over the next few years. The third stock that we are bearish on is the Orlando Magic with the ticker symbol ORMC. Its current stock price sits at a 304.02 TBD per share, and we have set a target price of 256.25 TBD per share. Its 104-week price range ranged from 304.02 to 389.26. Our summary for the Orlando Magic company and executive team is questionable transitions and rookie contracts misused. There are 3 bearish factors to consider. First one, strong season, weak continuation. The past 2 seasons has seen a solid increase in stock price due to 2 solid post-rebuild seasons with 48 wins and 52 win seasons in the first and second seasons respectively. But our analysts are severely disappointed by the direction that the executives seem to be taking, particularly with the most recent business moves and decisions. They are failing to capitalize on rookie contracts, which is the second bearish factor. With the letting go of Spunky Mantooth and the unmatching of Jared Latham, those were very difficult decisions to justify from our risk assessment and analyst team. We believe that CEO Kenneth Dianovopo is not capitalizing on rookie contracts enough. It is a well-known fact in the industry that rookie contracts are some of the most valuable assets in the league in regards to consolidation or winning. And with Tracy Ma and Vito Patterson both on their final years of absurdly cheap salaries, we expected the executive team and Dianovopo to push their chips in for a 60+ win regular season and push deeper into the playoffs. And as such, we would not be surprised at a 20 to 25% decrease in share price over the next 9 months as the regular season progresses. The Orlando Magic has been a storied franchise and storied company in the market. Their all-time high is 1016 TBD per share. And our case is that it seems increasingly unlikely that they will even reach half of that over the next 5 to 10 years. And we recommend investors to sell. And that is our rating for this market update. Unfortunately, I am being told from our moderator and other staff that we are running a bit low on time, so we will have to cease the bearish arguments and coverage of the stocks at this point in time. So therefore, I will move on to our ETF updates quickly before concluding the call. Firstly, our historical Contenders Etf. We haven't seen much change. We have not determined significant rebalancing moves. The only change was that we took profits on Grizz stock, decreasing it by 3% in allocation, and subtracting 0.5% from the remaining teams to make room and capital for Jazz stock. We believe that with the return of Pomeranian as CEO, they deserve a spot in the historical Contenders ETF, and we believe that this will reward investors greatly moving forward. For our Southeast ETF, the only change rebalancing that we undertook was the increasing of Hawk allocation to 20% from 15% and decreasing Heat allocation from 20 to 15 due to expected volatility from the return of the GM Vian. And finally, for our Risers Growth ETF, which is our new offering, we have chosen 4 growth stocks that we've identified to be potentially very rewarding for investors in the ETF. Those ones, please refer to the full report that was aforementioned. Those 4 stocks are the New Orleans Pelicans with the ticker symbol NOPE, the Dallas Mavericks with the ticker symbol DALA, the Utah Jazz, once again, with the ticker JAZZ Jazz, and finally, one of our bullish stocks, the Milwaukee Bucks, with the ticker symbol BUCK Buck. And all of those 4 companies were allocated equally in the new ETF. So we hope that prospective investors and current investors will consider investing capital into the new high risk, high reward ETF that we are offering. To everyone in our call today, in this conference call today, thank you for joining us. And as I said at the beginning of the conference call, if you have further questions or you would like to organize an appointment for financial consulting or investing consulting, please sign up through the hologram mechanic that we have introduced, like I mentioned earlier. Thank you very much, and I will see you hopefully with other analysts in 3 years' time in July 2119. This was Wilfredo Nichols, and thank you for choosing RBSL Boomers Market Research Incorporated. Have a great day.